your portfolio in a seasonally volatile month like December, which top 3 sectors would you invest in?
Well, actually, December tends to be a period of low liquidity, obviously as people tend to take risk off the table ahead of the holidays, and for that reason can be subject to some reasonable volatile swings in risk sentiment. We have consistently recommended actually clients focus more on fixed income, particularly high-grade credit, which tends not to have the same sort of volatility signature as you would get in the equity market. But within equities in general, we retain and maintain our recommendation that clients focus on, I think, those sectors which are going to benefit most from this structural shift in Asia, which is a focus more on consumption, domestic demand, and in particular, that is the consumer staples, discretionary, services area. Those 3 sectors, I think, will perform the best in these volatile times.
How is your China strategy shifting based on your assumptions of a recovery there?
Well, look, at the private bank, we're most concerned about this extraordinary run-up of debt that we've seen since the pump priming in 2008, and the consequences of that debt, particularly in the banking system and asset quality. It seems to us that if there is going to be a rebalancing from fixed asset investment towards private consumption, it's going to take some time. I think that the incumbent government is going to be under some pressure to maintain growth, and to that extent may have to engage in a little more strategic or judicious fixed asset investment, and to that extent essentially issue more debt. So we're a little bit concerned, although obviously noting positively the uptick in economic indicators that we've seen in September, in October, and apparently November if the latest PMIs are to believe. So we're watching our position closely, but nevertheless retaining some comfort in our underweight equities call, which at least from an A-share perspective appears to be the correct one.
Indonesia, the Philippines, and other countries in Southeast Asia have an ongoing battle with corruption. But these high levels of corruption in these countries do not seem to dent their appeal to investors. How come?
Well, I would say that corruption is not unique to those markets. Indeed, it's not unique to any market. I think what the market focuses more on is mismanagement. And the fact that the Philippines has been one of the most successful markets in Southeast Asia, if not the world, and indeed the previous year Indonesia was the same, suggests that markets are more focused on the underlying profitability and growth dynamics of that space. I think that Southeast Asia has had an outstanding year, Thailand, Philippines, Indonesia, over the course of this year. I'm not entirely convinced that that will be replicated, because I do expect to see some rotation into North Asia over the course of next year, particularly as the US growth profile or growth trajectory starts to pick up. But in Southeast Asia, clients have been most rewarded by, again, focusing on those all-important consumer sectors, which have tended to be a lot more protected and isolated from global volatilities. You know, when you have consumption as a proportion of GDP around 55 to 65%, the local economies tend to be a lot more protected from export downturns, for example, as a consequence of weaker growth in the Eurozone or America. And for that reason, Southeast Asia has been one of our top picks in terms of geographic asset allocation for Asia.